Yes, guys, so let's welcome back everyone. So we are going to discuss about IND AS 38, that is from where we left off in the previous session. So when we're looking at IND AS 38, we did discuss about the definition of the standard, and we said there is a significant difference from what we have defined an intangible asset under AS 26. If you remember the definition that we have given under AS 26, it was an identifiable non-monetary asset without a physical substance. Identifiable non-monetary asset without a physical substance held for either use in the process of production or for provision of services or for rental to others or for the purpose of administration. Now, however, under IND AS 38, these three purposes have been eliminated. So now the definition reads in simple sense as number one, it is an identifiable non-monetary asset without physical substance held by the enterprise to be used for more than one accounting period. This in simple sense was the definition given under IND AS 38. The reason, like we have discussed, is for inclusion of multiple other intangible assets eligible to be recognized as per IND AS 38 earlier, which was restricted as per AS 26. Clear? Now, subsequently we moved into the scope of the standard, and I told you that it includes all intangible assets unless otherwise it is covered specifically under some other standard. What were the other standards which were dealing with intangible assets? Intangible assets held for sale in ordinary course of business covered under IND AS 2. Your deferred tax asset covered under IND AS 12. Yes, so financial assets covered under IND AS 109. Assets arising from insurance contract covered under 104. Performance evaluation and exploration of mineral resources, mineral rights covered under IND AS 106. Lease of intangible assets, which was lease rights or rights to use a leased asset covered under IND AS 116. We've also discussed about your employee benefits or the plan assets arising from employee benefits, which is recognized under IND AS 19. These standards, since they were specifically talking about few intangible assets, they're excluded from the scope of this general standard, that is IND AS 38. Here, now, subsequent to that, when we looked at the recognition criteria, instead of looking at three recognition criteria which were given in property, plant and equipment, we have included the fourth one. What were the three which were similar to what we have read under IND AS 16? The three common points under recognition criteria are: future economic benefits are probable to arise from the use of the asset. Number two, the asset is within the control of the enterprise. Number three, the cost of the asset can be measured reliably. But the first and the foremost, which is an addition under IND AS 38 and a very important recognition criteria, forms the basis of the objective of the standard, is identifiability. Now, when we discussed about this word identifiability, okay, those 4 points were identifiability, future economic benefits are probable to arise, it is within the control of the enterprise, and the cost of the asset can be measured reliably. The first point that we discussed was identifiable. Now, why did you say that identifiability is one of the most prima facie criteria of an intangible asset? Number one, it was included as the first word even in the definition as well. Correct? Now, what is so peculiar about intangible asset, which is very difficult to come across as identifiable? Because in most of the situations, we find that an intangible asset is always held together with a tangible asset. We have taken the example of a laptop, mobile phone, the game CD. We have taken these examples for this case. Now, what are we here talking about? When I say identifiability, separability is not always necessary. It is not always necessary. If you can separate, well and good. If you cannot separate, also we have a specific treatment. So whenever you're talking about separability, that means an intangible asset can be separated from the tangible part. An intangible asset is separable only if, number one, it is acquired through a separate legal right. I purchased a patent for 10 years. I purchased an accounting software for 5 years. So these are acquired through a separate legal right. Number two, they may not be acquired separately, but they are capable of being separated. I am capable of separating it. and I have a right to sell this asset, exchange this asset, license this asset, or rent this asset. In such situation, you can still say that the separability criteria is satisfied. If an intangible asset is separable, then it is identifiable separately. Clear? However, in case an intangible asset is inseparable, that means it is so closely held with the tangible asset that the intangible asset does not derive value when you separate it from the tangible component. Like your Android OS, very simple examples I take so that it is easier for you to understand. Sell the Android OS separately from your mobile phone, not possible. So that means it is so closely held with the tangible asset that you cannot separate it. In such case where it is not separable, we try to classify the asset based on its predominant nature. What do you mean by predominant nature? Predominant nature means from where does the asset derive its maximum value? The laptop or a mobile phone derives its maximum value from a hardware. Therefore, they should be classified as a tangible asset. They should not be classified under IND AS 38, but they should be dealt as per IND AS 16. But at the same time, there could also be certain assets where the tangible component is insignificant and the significant value of the asset is derived from the intangible asset contained in it. I gave you the example of game CD out there, where predominant value of the asset is derived out of the intangible component. The tangible component is insignificant. In such case, I will classify it as intangible asset under IND AS 38 based on its predominant nature. Clear? So this is what we have discussed so far as IND AS 38 is concerned regarding your recognition criteria, definition, and the scope of the standard. I also explained regarding what is the objective of the standard and why is the standard so important for us to learn. Now that we have covered till here, I think it is very important for us to cover the remaining recognition criteria and wind up the concept of recognition criteria out. So let's look at the other recognition criteria given under the standard. What were the four recognition criteria that we have seen? The first one is identifiability. The second one is future economic benefits are probable to arise from the use of the asset. Just a second.